Welcome back. I'm your host, Darnell Jackson. And in this crypto report, we're going to be talking about Goldman Sachs. But before we do, make sure you subscribe to the most awesome channel on YouTube right now, Darnell Jackson Crypto. Share and subscribe right now. I want to jump over to the agenda. This is a very controversial topic. We're talking about the most notorious investment bank, Goldman Sachs, and their recent reports. And they're saying that crypto is not a viable investment before they open Ethereum trading. Why would they do something like that? We're going to uncover the reasons in this report. Let's jump over to the headlines, and we're going to do a little bit of background in this report. But let's start with the first announcement from Goldman Sachs, which claimed, as reported here by Jamie Crawley via CoinDesk here in Yahoo Finance, it says that crypto is not a viable investment, is what Goldman Sachs says. Let's take a look at this report. Goldman Sachs Consumer and Wealth Management Division has concluded that cryptocurrencies are not a viable investment for diversified portfolios in a new report for its clients. Okay. Now, this report was published by CoinDesk on Monday, and it cited reasons for pessimism, including high energy consumption and the possibility of technological advances such as quantum computing, which apparently could make current blockchain technology obsolete, and the risk of greater regulatory oversight hampering crypto's status as a speculative asset. They also mentioned the scarcity of regulated exchanges, and they're talking about the data is poor related to these exchanges. So in short, they're bringing a lot of negativity about the idea of cryptocurrency. Okay. And it says, after analyzing various valuation methodologies and applying our multi-factor strategic asset allocation model, we have concluded that cryptocurrencies are not a viable investment for our clients' diversified portfolios. Very important. Let me just highlight this right here. They are very clear here, right? Not a viable investment for our clients. Okay, how more clear can you say this? Okay, now let's switch to the next report. First, Goldman Sachs says it's not viable. Let's look at what they say next. In the next report on Yahoo Finance, here's a story from Goldman Sachs. What are they doing? Oh, Goldman Sachs to offer Ethereum futures and options. Wouldn't you know? Now, 1 second ago, they were saying that crypto was not viable. But now here's a report from Raul on Yahoo, and it says that Goldman Sachs is planning to offer futures and options contracts for Ethereum, according to its head of digital assets division. It goes on to say here, the multinational investment bank Goldman Sachs has offered more information on its cryptocurrency services. The bank intends to offer both options and futures contracts on the market's second largest cryptocurrency. That sounds much different than the previous report, doesn't it? It says The bank intends to offer both options and futures contracts on the market's second largest cryptocurrency, Ethereum. That's very interesting. This was brought forward by Matthew McDermott, who's the head of digital assets at Goldman Sachs. Now, I wonder if Matthew was aware of the previous report that claimed Goldman Sachs viewed cryptocurrencies as not viable for their clients. Very interesting. Now, what could be behind this type of stuff? Let's look at this last quote. We've actually seen a lot of interest from clients who are eager to trade as they find these levels as a slightly more palatable entry point. We see it as a cleansing exercise to reduce some of the leverage and the excess in the system, especially from a retail perspective. That's just a bunch of words that doesn't mean a lot. What I want you to take away from this report is the fact that here you have Goldman Sachs literally saying two different things at the same time. Here they're saying, yes, we're going to offer Ethereum futures and options. And just 30 seconds before, they're saying that crypto is not a viable investment. So what is the truth? Well, before you comment, I want you to take a few steps back if you're not familiar with who Goldman Sachs is and what they have been up to, okay? The first thing I want you to take a look at is the article that will forever be legendary as it relates to Goldman Sachs that was written by Matt Taibbi. He wrote this for the Rolling Stone, and it talks about all of the mischief that Goldman Sachs is known for. In this article, it says the first thing you need to know about Goldman Sachs is that it's everywhere. The world's most powerful investment bank is a great vampire squid wrapped around the face of humanity, relentlessly jamming its blood funnel into anything that smells like money. In fact, the history of the recent financial crisis, which doubles as a history of the rapid decline and fall of the suddenly swindled dry American empire, reads like a who's who of Goldman Sachs graduates. All right, you can read this article here on the Rolling Stone, but I want you to get an idea of what Goldman Sachs is all about. Here's another article. The great vampire squid keeps on sucking. You're trying to figure out why they would be so contradictory. And now you see, now look here, you see this article says it's more than 7 years old. So this is a history that's been established and documented. So here's another article. This one written by Jake Zemansky for Forbes, and he's talking about the vampire squid. Here's some more information. He's saying a New York jury this month found a former Goldman trader, Fabrice Torre, liable for misleading investors in one of those infamously lousy mortgage deals. But that embarrassment doesn't mean the great vampire squid hasn't stopped sucking the lifeblood from American capitalism through unfair trade practices. All right, now you can read this article as well. So what I want to do is give you some perspective on why Goldman Sachs is contradicting themselves today. Okay? They earned a reputation as the mighty vampire squid. And they also were notorious for betting against their clients. So when you see reports where Goldman Sachs is saying, hey, we don't think this investment is viable, but hey, we're going to offer this investment. Well, in the past, Goldman Sachs was accused of literally betting against their own clients. But before you can become a Goldman client, let's take a look really quick at what it takes to even become a customer with Goldman Sachs. How much money do you need to be a Goldman Sachs client? Well, it says here that Goldman Sachs Private Wealth Management typically requires at least $10 million to open a private wealth management account. In order to open an advisory or a managed account, clients must have at least $1 million under Goldman Sachs management or a net worth that exceeds $2.1 million. So that's what it takes to become a customer at Goldman Sachs. But again, I want you to consider the history of their dealings. And what you'll find is that Goldman has a history of betting against its own clients. This is a situation where they may advise their client to buy a particular security while the bank itself is selling or shorting that exact security. So if you can imagine taking a short out on a coin and then telling your customers to buy that coin. This is the type of business that Goldman Sachs became famous for. Here's a report from Reuters. Goldman exec, and this is in 2010. This is over a decade ago. Just to show you their history of doing this business. Goldman exec says the firm gained from trading against their own clients. I just want to give you some perspective on what they have done so that you can use your imagination and try to figure out what they're doing. Here's a quote. We may trade and may have existing positions based on trading ideas before we have discussed those trading ideas with you. And you can check out this article and do some more research for yourself on Goldman Sachs. But what I wanted to do with this crypto report was give you some background as to why Goldman Sachs is saying that crypto is not a viable investment right before they open Ethereum trading. Okay? Now the last part of this report, what I want to do, let's check out how the market has responded to this news. Now this came out yesterday, so we know that they have talked about trading Ethereum. So you would have expected to maybe see some reaction positively in the Ethereum market, but we're not seeing anything. I'm going back one day, and since yesterday, Ethereum is down. It's down 2.5% to about $2,500. So let's see what happens by the end of this week, next week, and if you can determine how the market is reacting to this news. Thank you for checking out the report. Make sure you subscribe for more awesome crypto reports. Until the next time, peace.